welcome to Officer 24/7. My name is Niharika Walia Bhatnagar and I'm with you with the area of ABFM. And we had started with Module B, everyone, and we are talking about capital budgeting for international project investment decisions. Now, when we're talking about international financial project decisions, in this case, what are we talking about? These are related specifically towards only one area, everyone. What is it about? This particular project is specifically about only and only one thing, which is related to the present scenario of international budgeting. That means this is not related to the normal ones, this is related to the international ones. है ना? So let's move on and talk about it in detail. What next are we coming up with? This is capital budgeting only, but little more towards international area. That means the cash flows and everything which is stated here is totally about the area of dollars, then in terms of international funding overall, if I have to be very precise about it. Okay, so when we talk about this area, we talk about this entire portion. Now let's move on and talk about the questions. When we talk about international capital budgeting decisions, now we are talking about these basics. When we talk about Okay, when we talk about this specific area, we are talking about what is the main focus of capital budgeting decisions in terms of international projects. When we talk about international projects, it is basically maximizing short-term profits, adhering to local business traditions, deep analysis of the investments in the foreign territory, or daily operation efficiency in global market. What is the main focus of capital budgeting, everyone? If we talk about international projects now, in terms of international projects, capital budgeting's main focus is basically to find out whether we should put money into the projects or not, and that too in dollars, in terms of yen, in terms of the pounds. We have to be very careful about using the money, because we're not putting money into something which we know about. There's a land which we know about, and there's a land we have no clue about. So in this case, a deep analysis of the investment in a foreign territory. What are some of the issues facing international capital budgeting? Familiarity with domestic work culture, knowledge of local language in the foreign country, then adherence to the domestic accounting standards or understanding of domestic legal systems. When we talk about this area, what are the main issues faced by international capital budgeting? That is, they have a problem with knowledge of the local language of the territory. It is also related to the laws of the land. That means what kind of laws are followed in that specific area, because if we do not know about the laws and how do they work, that can be a major trouble for the organization itself. है ना? Won't it be, everyone? So that's another important thing to work upon. Chaliye, then comes when we talk about this specific area, which is about why do international entities face different issues compared to domestic business in the capital budgeting? Achha, international is very different from the national ones because of a few reasons. International have lack of differences in work culture, similarities in legal system, uniformity in business traditions, or variations in work culture, legal system, currency system, and more. Domestic businesses are basically something which you know about the area. No? This is where you have the laws of the land. You know it very well that you will be able to earn a good amount of money that we are having in the business, hai na? But when we do not know the market, how will we grow further? For that, what you need to do is you need to really work upon the work culture, legal systems, currency systems, and more. Let me give you an example. You have seen McDonald's. But the McDonald's initially came to India. If we talk about the work culture, legal system, and everything else, this was a leading organization of food chain in the entire world. When it came to India, it came with pork, it came with beef, it came with turkey, all the specific dishes which are definitely not eaten in India in that particular way. So what happened is they introduced all these traditional things according to the Britishers, or you can say the Western people. The Western culture was very different from ours. So technically Indians had a problem. Other than chicken, there is no other thing that was eaten much. So what happened is all the particular dishes which they brought became an utter failure in the country. McDonald's, which was losing the entire world, failed in our country terribly. Then they went back. They did their homework, and when they came back to India, they started Mac Aloo Tikki. They started Mac Veggie. What are all these things which they introduced? In this case, McDonald's is clearly saying that if they had to enter India, if they had to master India, they had to intermingle and get their food stuff according to the country. If you would have seen Domino's is basically an international level organization, but when it comes to working in India, it has introduced paneer tikka pizza, it has introduced achari pizza. What are those pizzas? Those are having Indian flavors because they are dealing with Indians, and when you are dealing with Indians, you will have to deal with them with their specific culture rather than the other culture. You know? Now, this is the particular point that we have to really work upon. Done, everyone? Chaliye. Then comes the next question. What is the rate of the contracting price of the future date in currency exchange, everyone? When we talk about the currency exchange rate, exchange rate, which is basically in terms of the current one, it is defined as spot. When we talk about, if I talk about the current money, not the future money. Okay, so when we talk about this area, this is the money that we read it right away. So in this case, what are we having, everyone? What is the rate of contracting purchases at the future rate? We're not looking at the purchase price today. We are looking at the purchase price which is going to be tomorrow. You know, is it spot price? Spot is current. Forward, TT, this is telegraphic transfer. They have two rates, buying rate, BR, or selling rate, TTBR and TTSR. And then we have exchange rate. When you talk about future, the future can be based upon forwards, or basically it can be related to the area of futures. These are two things that happens. So in this case, we are determining the rate that is going to be in the upcoming future. Not today's, this is the amount of upcoming future that we are going to have. This is a forward contract rate. Acha, why might there be a discount to the value of local currency when selling it to buy another currency in the future? Due to fluctuations in the spot rate because of the future premium payment to encourage local currency transaction to discourage future transactions. Why might there be a discount to the value of local currency? There might be a discount due to the area of local currency. Acha, the reason can be their value can be higher, lower than us. Basically, what you're doing, why there might be discount to the value of local currency when selling it to buy another currency in future. We are looking forward towards buying another currency in future. So basically, what you're trying to do is your future currency, future premium payment you are doing currently. Why? Acha, everybody, why there might be a discount to the value of local currency when it selling it to buy another currency in the future. Matlab, if I have rupees and I want to shift towards dollars, so what's gonna happen at this point of time? There's a discount on the local currency. Matlab, the currency is sold at a lesser price. That means this amount is at a premium. Obviously, when our currency, home currency, is in discount, the other currency is gonna be in premium format. That is why, because of the future premium payment. Important question, everyone. I think this similar question had discussed when we did in the we were there in the marathon even. That is regarding liberalized scheme there. When we talk about the payments and everything that is being made, liberalized remittance scheme, everyone. According to you, what do we do in terms of the LRS? Under LRS, what are they saying? The LRS is saying that under the LRS, what is the annual limit for individual remittance abroad? 50,000, 1 lakh, 1 lakh 50, or 2 lakh 50. When we define about liberalized remittance scheme, In India, the annual limit is US dollars 50,000, 1 lakh, 1 lakh 50, or US dollars 2 lakh 50. The answer is US dollars 2 lakh 50,000. So in this case, the answer is US dollars 2 lakh 50,000. Okay. What does the term PE refer to the investment classes such as high PE and low PE? Acha, PE is a very important terminology. PE basically means what? It says price earning रेशियो. ठीक है, मतलब प्रॉफिट अर्निंग्स और प्रॉफिट अर्निंग्स और पोर्टफोलियो इन पब्लिक इक्विटी. Actually, I've given you the answer. The formula is basically price upon earnings. This can also be stated as MPS upon EPS, market price per share, or divided by earning price per share. Market price is the value at which it is available in the market, while MPS is basically what? MPS is basically the market price, and earning per share is the earnings that we are having in this specific area. This is called price earnings ratio. Everybody, what does a hedge strategy involve? A combination of world market portfolio, riskless foreign domestic currency bonds, and currency specific hedge portfolio aim to achieve. Okay, they have talked about multiple things. First of all, hedging. Everyone, what do you mean by hedging? I am scared that I might lose money. So I wanted to have a counter transactions where I can save my money. That is what people think about hedging. That's what I'll think about hedging only. This is when I want to avoid the risk. If I'm having I might have a loss, I'll do a similar transaction in the opposite reciprocal area so that I can have some money for the future. That's the first thing that I'll do. That is a part of hedging. Then riskless foreign and domestic currency bonds. Riskless means there is no risk involved. That means you might be looking forward towards bonds. Why? The point is when we talk about the bonds, plus point of bonds is it's a loan. If you take a loan, what are you going to do? If you take a loan, then the very first thing that will happen in terms of loan is there is a defined rate of interest that we have to receive or we have to pay. So in this case, that is already defined. A currency specified hedge portfolio aim to achieve. So technically, a currency specific means we might be dealing only in rupees and we might deal only in dollars. We might deal in anything. If it is home currency based, obviously you don't go through foreign currency fluctuations. Reason to go through the foreign currency fluctuations, you need to have another currency involved in it. Now, if there's only your uh, home currency involved, then there is no need to be worried about the currency price change. There is always a stability. If I'm dealing in rupee, we are living in India. So if we are talking about rupee, the value of the rupee, even if it changes, is going to be the same. Speculation on stock performance, hedging against interest rate fluctuations, hedging against currency risk or exposure at currency risk. When we talk about this specific area, the answer is hedging against currency risk. The point is, why do you do the hedging? Hedging is basically done only for this purpose, so that we don't face the risks altogether. Okay? That means the basic reason behind doing hedging is you know that there might be losses. To cover up those losses, you have to be very sorted now. So if if you're preparing yourself for those losses that can come up, then we'll have to um, cancel out all those losses. That is where we'll go for losses to be covered by hedging only. Hedging is not done for something which is not sure to be done. When it is sure to be done, then matlab if you know that there might be losses or there might not be losses, then the ideology is different. If you feel that there is an anticipation there might be losses, then you will prepare yourself for those losses in advance. You won't wait for the thing to happen, isn't it? But when you have profits, then you will not maybe go for a lot of hedging, but you can go for hedging when you know the market is unpredictable. Another fact about these things, na, hai na? Now, chaliye. Now let's move on, everyone. Hedging against currency risk. What is the common and the preferred method of constructing a hedge portfolio? Hedging only a portion of funds exposed to currency risk, hedging the entire amount of funds exposed to currency risk, then is ignoring riskless foreign and domestic currency bonds, or focusing solely on foreign bonds with currency risk. I believe in this case, I always remember hedging is required whenever we are dealing with something which is unpredictable. If I feel that there are losses that are coming up, then I need to do the hedging part. Without hedging, I cannot survive. You know, and then I cannot say ki let's do partially na. How can we do partially? If the entire 10 lakh is on stake, then how can I be like, oh, I think I am a little biased towards 2 lakh. Remaining is I'm not. Either you are totally into it or totally out of it. When you are looking forward towards hedging, if you are into hedging, then always make sure that hedging is done only and only when we relate to the area of safety and transaction, which is basically making sure that even if we have losses, we will cover up with profits. That is what they define in this area of hedge portfolio. So technically the answer is hedging the entire amount of funds exposed to the currency risk. You cannot be choosy ki let's keep partial amounts. Either you are totally into it or you are completely out of it. You won't do the partial part unless you are worried about only the, I think equity part is always something which is worrisome, to be very honest. Debt part is never something I think that can really scare anybody, because you will receive the interest in any case. And even if the company is dying, then there is a clear statement that will come up ki theek hai na, if the company is dying na, then don't worry about it, because if the company is dying, then debt will be paid in any case. Equity might not be paid, but debts are paid in any case. They are always solid about this. ठीक है अच्छा. What is the main difference between direct and indirect channels for international portfolio investments? पता है, it is very difficult to do any kind of international portfolio investments. When we talk about any kind of international portfolio investments, they always think about this area in terms of the learnings. Let's see, direct is basically I decide I am investing in it, and when I'm not deciding or I'm deciding against it, or maybe I'll be, see, if I want to put into dollars, I directly go and I invest in the particular organization which I want to. That is direct. Indirect is basically I'm doing that part in through an institutional. In India earlier, na, FDIs were not allowed. Slowly and steadily they allowed it, because the problem was we were enslaved for so many years that we were always cautious about this for good amount of time. So that is what they talk about. What is the main difference between direct and indirect? I just gave you an example. Direct channels involves investing through intermediaries like mutual funds. Indirect channel involve indirectly in various sectors. Investing in various direct channels allow investment through American deposit receipts, or indirect channels involve investing through exchange traded funds. When, if you want to invest your money in a certain organization, you are putting it directly, then that is a part of direct channels. Acha, in this case, when we talk about the basic thing, acha, what do you mean by portfolio investments, everyone? Portfolio investments are those investments where we talk about the area of portfolio investments are what? See, I faced a major risk in the business. So what would I do? Will I put all, Warren Buffett once said, never put all the eggs in one basket. What are we doing, everyone? Can I say I'll put each and every penny into one specific area only? If my business is growing, I will define where I'm going to put my money. And I'm not going to put all the money in one specific company. I am going to split up my money into multiple companies, isn't it? And when we are doing it in multiple companies, then what will happen? That is where I'll ensure my safety. So in this case, the correct answer is mutual funds, everyone. Done, everyone? So in this case, the answer is, always remember, portfolio funds are basically the ones which are dividing or splitting the money into multiple areas. That is mutual funds. What does the country risk involve in context of foreign investments? Risk of economic recession, risk associated with the exchange rate fluctuations, risk of political developments. Legal systems, social instability, risk related to the area of type of asset, liquid, growth, long term. There are so many things which affect a business in this case. So what do you mean by country risk? Country risk is an entire country dying. For example, Sri Lanka faced a major loss. The organization, not only organization, the entire country died like anything, and they faced major losses because of the scam which happened in the country due to the leaders eating up the entire country. So the entire country went through currency failure. But this is the highest level of bankruptcy you will see. A country which required India's assistance, the assistance of other countries to raise it again. There is risk of political developments. Basically, when we talk about Pervez Musharraf coming into the particular view, the military coming into the Pakistan there, and then taking up the rules, they're taking up the read. That is an important point of change in those organizations. Then is legal system again. At one point of time, there was no restriction on opening up the liquor shops at multiple areas. But when we talk about yogi government in India, what will happen? They have changed all the religious areas or whatever whatever organizations existed near about these areas. They were asked to shift their organizations. So the legal system changed now altogether, and social instability is another pointer. How can say social instability is basically something which is very important. Social instability is what? The country is having major riots, then the country is having religious problems. That's a part of social instability. Okay? Next is CAPM model, everyone. Do you know about the CAPM model? I think we'll be talking about it in future. Capital asset pricing model says, first of all, we put money into some risk-free or securities. Then there's a beta, a multiplier, which affects a business. And when we talk about the beta says that there is a risk of the market, the premium that you reserve because you are putting the risk in it. And then you remove the risk-free rate of return. That means if I say that the return that you are making from the market is 14%, but 6% is, if you take a minimum 6% is always there, just because even if the risk is there or not there, you will get 6%. So they are clear about the 6%, isn't it? So the answer is going to be regarding the risk-free rate of return. Acha, beta is related to the area of what? Measure the volatility, risk-free rate of return over time in the CAPM model. What's the meaning of this beta? This beta is actually the multiplier, pata hai? Everybody, you and I are sitting and we were talking about it. What happened is, the organization said we had 6% of risk-free rate of return. The beta for the organization was, it's actually, you can say, the gossip monger. What happens is, in the world, something happened, like a bigger thing. It said that, pata hai, things are changing outside. The beta said, oh, let's change it inside the organization or industry as well. So if there was change of 1 outside, we will change it to 1.5 within the organization. This is a multiplier. Either it can reduce the things or it can increase the things. This means when the market is hit, is the industry hit with the same impact, lesser or more? That is something which is defined by CAPM model. So the answer is measure the volatility or systematic risk compared to the market. Okay, now comes the next point, everyone. When we talk about the entire portion of the method that we have talked about, I would like to show you our website as well, as we have started with our series for JIIB as well as CIIB. And if you are planning to get yourself enrolled in any of those areas, then what can you do? Let me take you to that particular area. Let's go to our website, that is www.adda247.com. Go on to the area of CAIIB June 2024. Can you see it, everyone? Currently double validity is going on. What does this mean? You buy it for 6 months, get it for 12. You buy it for 3, you get it for 6. Currently 6 plus 6 months validity is going on. Under CIB Mahapack, you get 500 hours of classes, test series, ebooks, and 1098 videos. Plus point. Under Mahapack Bilingual English Medium, both are available. Test series available. Ebooks available. Then comes current batches available. Revision batches also available. Along with the entire portion, you get optional subjects. In this covered all the 5 optional subjects. Matlab, you don't have to worry about which particular subject I should take and which I shouldn't. You can look at all the particular options and then you can choose it. So this really eliminates the portion of your disturbance regarding the decision making. All you need to do is you need to use the code Y541 and you will get a discount of 80%, and you can buy it for 6823.95. This is where you want the optionals as well. If you feel that you do not want the optionals, you just want the basic classes of the 4 subjects and you don't want it for the final one, then you can also take up the normal resolution batch as well. That is also there, everyone. That means just go on to the area of JIB and CIB, go on to the area of this area of June 2024, and then go on to our batches, and this is where you will find it in the resolution batch. BFM is started. It is visible to you. When we talk about the ABFM, this is where this ABFM batch is also there. So all you need to do is click on the area of buy now, use the code Y541 and you can apply it. You will get it for 79 or 80%. This is 1889.79. This is the ABFM. If you're interested in the entire course, you can also take up the entire course. If you're looking forward to it, then kindly do not delay because the sale is ending soon, everyone. So thank you so much for being there. I'll be meeting you in the next class. If